It's interesting when you look back in modern history, Republican, Democrat, raising taxes, lowering taxes, any of those time periods, the market always went up, except for one, George W. went down, and that was the beginning of the financial crisis, which was obviously very, very unique. I mean, Eric and I have talked a lot about this. Eric, you've heard this before, right?
Yeah, it's really interesting. It's been pretty much neck and neck between Democrat and Republican presidents. And the bottom line is the president only has so much power. He can't just push his agenda through. It's got to go through Congress. So we at the Wealth Alliance have analyzed this in detail. We think there are three possible scenarios. The first one is what we call a Democrat sweep. Biden wins the White House, and the Democrats take a convincing lead in the Senate. And if that were to happen, you would see the Biden agenda take hold. And that means higher corporate taxes, higher personal taxes, green energy, a huge stimulus bill, and probably a reduction in trade wars. The second one would be a Biden win, but either he doesn't take the Senate or just barely does, in which case he may not get his agenda through. The third case would be a Trump win, in which case we would continue to see more of the same. That is, lower personal taxes, lower corporate taxes, a stimulus bill, but maybe not as big, and probably continuation of trade wars with China.
We're bullish on equities. We think it's going to be very volatile going forward, but when you add up those three scenarios, I think in any one of those scenarios, we're still looking at a good equity market going forward. You know, there's a lot of white noise out there. A lot of people, this is the $64,000 question that everybody wants to know. And we've been through many, many difficult times in the past. This is no different. If 2016 taught us anything, it's don't try to predict what's going to happen in the market with an election or a Brexit or any other thing. So tried and true things stay true. Diversify, take tax losses, rebalance, keep an eye on your managers and your funds and in ETFs, and don't get emotional about what's going on. Boring advice, it works very well over the long term. That's what we're saying.
I agree, Rob. And I think what people are missing is that the Federal Reserve changed a 40-year course a few weeks ago and said, even if inflation ticks up, they do not plan on raising rates for the foreseeable future. And so with a 10-year Treasury bond below 1%, you may see stocks trade to valuations that we've never seen before. Because in order for investors to get a decent return, they're going to have to put more in stocks. I'll leave you with this last thought. Faya Sarafim once said, "Nervous energy is a great destroyer of wealth." Stay calm, stay focused on the long term.